Hello, and welcome to myfinanceteacher.org. In this video, I want to have a look at gold because US dollar actually is breaking down below its 50-day moving average, and we see a relatively large green candle on the chart of gold price. And actually, as I mentioned to the members at myfinanceteacher.org back on the 7th of October, when we saw this green candle after a bit of a bounce from the 50-day moving average on the US dollar, I did start with a very small allocation of only around 10% into precious metals related assets, just in case if dollar was to turn around and go back down below this 50-day moving average. This is actually what's happening at the moment, and it's not really a good sign because it means that for the rest of the ongoing short-term daily cycle, US dollar is probably going to slide down. The ongoing short-term daily cycle is now 38 days old, and usually these last for about a couple of months. So we potentially have another couple of weeks ahead of us of weaker US dollar. And what it means is that we potentially might have a couple of weeks of stronger gold ahead of us as well. What that means is that the short-term daily cycle on gold did probably start anew back on the 24th of September, giving us the previous cycle that lasted for 43 days, and we are now 15 days into the new short-term daily cycle on gold. Before we continue, let me remind you guys to subscribe to the channel if you haven't, and click that bell notification. Thanks a lot. The more important question though is if this new daily cycle is a part of the new intermediate cycle as well or not. In other words, are we still in an ongoing intermediate cycle that is already pretty long at 203 days old, or did that intermediate cycle finish at 188 days old, which is closer to the average duration, and are we now 11 days into the new intermediate cycle? So here are the possibilities. One of the possibilities is that this next short-term daily cycle is still part of an ongoing intermediate cycle in gold, in which case we might see another retraction back down towards the 200-day moving average. Whereas another possibility is that this new daily cycle is part of a new intermediate cycle as well, which would imply pretty strong gold over the next couple of weeks, maybe a bit of a correction into the end of the short-term daily cycle, followed by another strong rally into the second short-term daily cycle of a new intermediate cycle. To be honest, right now I'm not pretty sure which of the scenarios is more likely. I want to see what happens to gold versus its 50-day moving average. If gold breaks that 50-day moving average convincingly, that might mean that a more likely scenario is the one with the new intermediate cycle and stronger gold over $2,000 over the next couple of months. One thing is for sure though, it's good to start at least with some small allocations in precious metals back on the 7th of October, and if the first scenario plays out, we still have most of that portfolio in cash to add at significantly lower prices. If on the other hand we see gold strong over the next few days, it would be nice to already have a foot in the door. Is it in the door? Maybe through the door. Anyway, let's have gold kick that door open at $2,000 and stampede higher. And before you stampede to your own things, let me ask you the following question. Are we going to see gold close to $2,000 in the next 2 weeks? Or are we going to see gold close to $1,800 over the next couple of weeks? Let me know what you think in the comments below. For more frequent and detailed updates on a range of assets, make sure to join us at myfinanceteacher.org. You can do that by clicking this register button. I also would appreciate if you subscribe to the YouTube channel, hit that like button, and share this video with your friends. Bye for now, have a nice day, and good luck in your trades.